Hello traders, Gary Wagner here. It is 12:13 in Honolulu, 5:13 in New York on Thursday, 16th day of February 2023, and this is the Daily Report for Gold and Silver. Traders, today the BLS released the most current PPI report for January. And what it says in a nutshell is that inflation will remain more persistent or sticky than anticipated. We lay out the repercussions of that in our opening letter, but as it pertains to gold, gold's early gains diminished, and we currently have gold futures basis the most active April contract, neutral on the day with no net gain or loss, and fixed at $1,845.30. There were some slight headwinds from fractional gains in the U.S. dollar, up 0.13%, with the index currently fixed at 103.97. The same with silver. It had a fractional decline of 0.06%, and March silver is currently fixed at $21.56. This first chart is a Japanese average or Henkin Ashi chart, and we are looking at it to determine the strength of the current downtrend. That is what is best suited for this type of chart. This small candle here represents trading in Australia, so it is absolutely not completely formed. The candle we want to focus on is today's activity, which is this candle here. It does have no upper wick, the same as yesterday, which means that the strength of the trend has actually grown, considering that the candles that preceded it had upper wicks and lower wicks and small body sizes. What does that mean for where gold could trade to? Well, to determine that, we want to look at a couple of different levels. The 61.8% retracement is now in play because effectively gold closed right at the 50% retracement. That comes in at 817, which brings us to our next chart, which has one difference. It is in candlestick format rather than a Henkin Ashi, and I have added the 50% retracement mark. We can clearly see that gold closed just below it and is currently trading below it. That is this small candle here, which is why 1817 is now really in play. We really should not see anything below 1800, and that is where I am putting major support, and it tells us that we most likely will see either the market trade sideways and consolidate or move towards $1,815. The last chart we will look at in terms of our technical studies today is a daily chart that's on the screen, and it has data from all of 2022 as well as our current year. And what we have really been focusing upon was the dramatic change after hitting a triple bottom back in November, and then having a series of higher highs and reaching an apex that came in at around 1975 and then began to trade lower. That's why it is evident that we are in a corrective wave. That being said, we want to then look at various areas, not based on Fibonacci, but based on the series of higher highs or the tops. We are currently right at this critical area. I don't think it's likely that this area will hold. If it does not, we would then look at this next area, and that comes in at 1800. So my belief is, all things being equal, we will continue to see gold pressured lower or at least sideways, with potential support between $1,800 and $1,815. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for the weekly wrap-up and review. Have a great day. Bye-bye.